What's up, guys? It's Rob here, and today we need to talk about the markets and a potential massive crisis that could be coming. And a lot of you guys may have heard of this before, the Evergrande crisis, but we're going to talk about it in this video because I do think it's important and it's kind of flying under the radar for a lot of people, and a lot of people probably aren't thinking about what this could mean for the stock market as a whole. So if you actually look at a yearly chart of the S&P, you can see that we just recently took a pretty significant dip, right? We were down about 5% at our lows off of our highs, right? So what was going on with that was that a lot of people were starting to get really worried about this Evergrande situation that I'm going to explain. But now we're actually rallying up a bit. And I do want to point out before I show you guys the chart that I've made that explains the Evergrande crisis, I want to explain to you guys that a lot of the time you see with these market dips, especially over the past 2 years, if we look at that oftentimes we have a minor dip, which is followed by a major dip. And that even happened with COVID, right? We had a minor dip, and then we rallied above, and had a major dip. And that pattern has been seen again and again, right? We have a big dip here, and then we rally up a bit, and we have another dip. It's not always that the second dip is more significant than the first, but oftentimes it can be, right? We had a big dip here, we rallied up for a bit, and then had another dip. So a lot of people have been thinking that because we've been rallying over the past couple of days, that this crisis is it's essentially a crisis averted situation. At least that's what a lot of people are thinking. That's not necessarily the case. You can even see here with the more minor dips that we've had, we really haven't had any significant dips in the past. But even here, we had a little dip, a little rally, then another little dip. So I'm just pointing out to people that there is the real potential that we are going to see another big dip in the stock market, and that the danger is not over. Just because we have been rallying these past couple of days doesn't necessarily mean that there is nothing to worry about. Now, what the Evergrande situation is, right? I'll just give you a quick rundown of it, just something that I pulled off Bloomberg that explains the situation in 140 characters or less. They say, basically, a huge Chinese property developer known as Evergrande owes tons of money to tons of people and may not be able to repay. Failure could cause a global crisis. Now, the reason why is because of who Evergrande owes money to and how much money they owe. Now, Evergrande was the largest property developer in China for a very long time, and this caused them to amass a lot of different properties, a lot of different assets, but also a lot of debt because they were oftentimes financing the construction of the properties that they were building through debt. They were taking out debt to not just buy the land, but also to pay the contractors, to buy the supplies, to do all of that. And that's really going to be coming back to bite them, or so it seems, because if you look here, the people that they owe money to are numerous. It includes Chinese banks, Chinese retail investors, foreign hedge funds, foreign investors, suppliers, and contractors. And the real downside to this is that this is an issue that doesn't just affect China, because a lot of the debt that they've taken out has been from foreign hedge funds and foreign investors. So it's the whole world really who will be suffering. A lot of banks are invested in Evergrande and have given the money because they were the largest retail property developer in China. And China is one of the world's largest economies, soon to be the world's largest economy from the look of things. So they owe quite a bit of money, actually. If you look, they owe $368 billion to banks and $300 billion in bills to suppliers and contractors. So it's a ton of debt that they have. And what's really dangerous about this situation is that if they default on some of their debt, right? Say they default on some of their debt to banks. Well, those banks were assuming that debt was, a pretty safe asset, right? They assumed that the largest property developer in all of China would be able to pay back the debt that they took out. And so they probably weren't pricing that debt as a very high risk on their radar, right? They didn't think that it would be defaulted on until now, apparently. And, if it does get defaulted on, then that could really have huge negative impacts for those banks' other investments, because a decrease in that much cash, right? $368 billion worth of cash gone for banks, even if it's split across many banks, is still a massive amount of money to be losing. And that would likely have to cause them to sell other investments, which is really why, the stock market was reacting so poorly to this news of the Evergrande crisis, right? Why we started dipping so much, because people were worried that other investments, the banks were holding, that investors were holding, would have to be sold to cover up for the big losses, right? Because a lot of the times banks and investors use margin, and if they have too many bad investments that go south, then that can actually cause them to have to sell some of their legitimate investments that are still doing well, causing a downturn, right? So that's what a lot of worries were based on, right? This was not even based off of any actual, defaults by Evergrande at the time. This was just caused because of fears of Evergrande's defaults. We don't know if Evergrande is going to actually default on all of their debt yet. But there are really two situations that I see happening with this. And, the two situations are one, I think that there could be a debt crisis and a temporary massive stock market sell off. I think that, if this really ends up happening and no one does anything about the situation and this massive property developer just defaults on all of their debts, that would be a huge hit to a lot of banks, a lot of investors, and that could really cause uh, the market. This is tracking the market, SPY, the S&P 500. That could cause even the U.S. market to sink quite a bit. Now, obviously, we've been on a massive bull run ever since COVID hit. We dropped down a bit, and then we've been on a massive bull run, just moving straight up. This is the first time that I'm really seeing something that could be significant enough to really shake us up and just get us off of this pattern. I'm not saying that we won't then return to it, but there is a situation where I could see us dropping down quite a bit, 10%, which is where we start entering into correction territory. Once you drop down 10% from your highs, you're officially in correction territory. So I could really see that happening with this. I'm not sure if it will. It's not guaranteed because the other option is that China bails out Evergrande, right? And they may well do this, right? They've bailed out other companies in the past. This is a very important company for them. It's the largest property developer there is, and this would remove a lot of worries in the market. However, it would also have the side effect of weakening China's currency and probably all currencies, right? When people see that there is the risk of some kind of market downturn, and as soon as there's the risk of that, the government just starts printing money and handing it out to companies to pay off debt. That really debases the value of the currency and the value of holding the currency, because a lot of the reason why people might hold currencies instead of assets is because they believe that the assets might take a big dip, and then they can buy those assets with they can buy more of those assets with the same amount of currency that they could before. Now, with a situation like this, where in order to avoid a big dip, the government prints a ton of money and stops the assets from dipping, that really removes a lot of the incentive to be holding that cash, because the reason you're holding it is so that you can buy the assets cheaper. If the government's always just going to print money and use it to boost up the price of assets whenever it looks like they might be falling, then there's really not much of a reason to hold cash, because the government's essentially saying to you, don't worry, these assets, we're not going to let them fall. We're just going to keep printing money as long as it takes to keep them going up. And that's not necessarily a market worry with the China bailout, but a currency worry. If you have a lot of cash on the sidelines and you end up seeing that happen, that might not be good news for the currency. We kind of saw the same thing with COVID when we started dipping down a bit. The government, heated up the printer and just started printing, and they have not stopped yet. We've just been printing money with those stimulus bills, and the Fed has been purchasing a bunch of bonds and a lot of treasuries. So, there's a lot of money being printed in the system right now, and this would just be another massive quantity of money to be adding to that pile. So there is something to worry about either way with this crisis. I don't think it's good for the markets to have to deal with this. I think that probably the best situation would be some kind of bailout rather than causing a market crash. I do tend to already not believe that too strongly in holding a bunch of cash on the sidelines. I do tend to believe in long-term investing, and that the price of assets will go up. And if the government wants to aid with that, then so be it. Let them do it. But really do watch out for the currency and the values of those currencies that you're holding, if you are holding any. And obviously, this isn't any financial advice. I'm not trying to tell you to buy or sell any stocks or currencies, and I'm not even trying to convince you that the market's going to crash. I'm just letting you know my opinion on the situation, maybe informing you of the situation for the first time. Maybe you haven't heard of the Evergrande crisis, but it is on a lot of investors' minds. So if you've enjoyed this video, that's all I've got for you. So other than that, guys, have a great day. I'll see you in the next one. Bye.